So I want to share a risk management strategy that I do on a day-to-day basis. But this is especially effective on a choppy day like today. And what I mean by choppy day is today like SPY, for example. It shows a tight range day, and it doesn't show clear direction like the previous day where it shows a bullish direction. So if you go long, it was just an easy day of essentially profit. But during a tight consolidation day or an inside day, there's no clear direction in which way the market's going to go. So whenever you take a position, like for a short position, it may be the case that the stock just starts running against you and it goes long. Or if you take a long position, it may be the case that the stock goes against you and it starts dropping down. So days like today, there's no clear direction in which way to go, and so a supreme risk management strategy is definitely critical. Otherwise, for example, if you go into Google, let's look at the 5-minute chart here. So you start off the morning, start with a drop and continue to drop. So take a short position. You may be able to like squeeze for if you're fast, but then the market's turning against you and it starts going long. And it starts again, and then it goes long. It just essentially becomes a very choppy. There's no clear direction whether it goes up or down. So I'm going to share a couple of risk management tips. So the first one is keeping your size small, which is a given. If it's a choppy day, there's no reason to go large because there's no clear direction or indication on where the market will go. So keeping the size small is critical, and that way if you have any gains or any losses, while they may not be spectacular, they keep you in the game, and again, just risk manage at this point. And then the second one is stay away from high octane stocks. And what I mean by high octane stocks is stocks that move like crazy. For example, Tesla. Tesla's a crazy mover. It's got a personality of its own. There's millions of traders trading every day, every minute behind it. And it just moves so fast that, at any given moment, it can just go against you. So Tesla or Netflix or any of these like high octane stocks with its own personality, stay away from that. Start moving in if you do want to trade with heavy movers, the ones that don't move all that much. So for example, like Coca-Cola, it doesn't move much really. AT&T, Kraft Heinz, these are all like slow movers, and they're not high octane movers. And again, in a choppy market, just want to stay with these. These are safer, these are liquid, and they're not going to cause a heartache for you. The next one is move your stop loss quickly to your break even. So for example, if you enter Google early on and you say you enter right here within the first 2 minutes or 3 minutes, and you enter at 92.17, the stock starts moving down lower and lower. What most traders do is they set their stop loss likely at either high of day or yesterday's close. But if you say you enter again at 92.17 and the stock moved in your direction, then then start setting your stop loss right when you enter it at 92.17. So that way, worst case scenario, now you have $0 profit if you get stopped out, and you have $0 losses. So, it's a break-even day. Again, this is the day that it is choppy and you can't really tell where the market is going. So risk management is key. And again, the 3 tips that I would recommend is 1, keep your size small. And two, stay away from high octane stocks like Tesla, Netflix, what have you. And three, set your stop loss quick to your break-even point. All right, hope that helps.